Hi, good afternoon, everyone, and welcome to the third session today around Is the Future Digital, and where we will look at open banking and the rise in mobile apps. My name is Paul Barber. I work as a business consultant at Pay360 and have over 20 years experience in payments and income management, as well as IT service management and print and digital mailrooms. I'm also joined by my colleagues this afternoon, Alex Common. Alex Common presented the opening session today, and he joins us again today for this afternoon's session. Alex is our Chief Product Officer and has over 15 years in payment management. We're also pleased to introduce one of our partners, Craig Tillotson, who is the CEO and co-founder of Ordo. Ordo are basically a fintech company who provide open banking services, and we're pleased to welcome Craig to this session this afternoon. So by way of an agenda, I will start by taking you through looking at the rise of mobile apps and the continued uptake in the mobile app space. And then Alex and Craig will then look at the open banking and take you through further details based on some of the information that Alex provided in this morning's session. And as with all the other sessions, at the end there will be a time for Q&A. You've all joined the meeting and are basically muted, but if you look in the top right-hand side of your screen, you should see a question mark, which will give you the opportunity to ask questions as we go through. And my colleague Wayne is there and he will answer those questions. Any we don't get to during the session, we'll pick up at the end, and then any outside of that we will look to pick up when the event has finished. So let's start with mobile apps. So the first mobile phone came out in 1985, a long time ago now. Very simple devices, basically used for making telephone calls. You could do nothing more than that. But over time, this mobile phone evolved into what we now know today as the smartphone. And in fairness, a lot of the smartphones that are out there are as powerful as a desktop PC in many ways. An interesting start there on screen. Today, 84% of adults inside of the UK own a mobile phone. So that's 60 million users inside of the UK. What does that mean? Well, it means we've got a high availability, high reach device there by which we can transact with and communicate with customers. And as part of that, we've seen a big rise in the use of smartphone penetration, which continues to grow, and also the apps that run on these devices. And the data is telling us that this is not going to stop, and in fact will continue to grow for the foreseeable future. Now, I consider myself as a standard user of mobile phones, and when I look at my own usage, apps play a big part in that mobile phone or the actual smartphone itself. Home-wise, control my heating, home security through my phone. Finances, I have my banking apps on there. My utilities, so my energy company, I get all that information delivered through my smartphone. And then car-wise, I've got navigation apps on there, music apps, etc. When I get in the car, even that connects. So we've got this complete connectivity of that mobile phone. And as I say, apps play a very big part in me using that mobile phone. And it's fair to say I probably use it far more for the apps than I do for even making phone calls on. So as we did with the other sessions, what I'd like to do is just run a quick poll now, just to get your view on how many minutes per day you think that an average consumer inside of the UK spends on their mobile phone. So we've got several options there. Less than 10 minutes, 15 to 30, 30 to 45 minutes, 45, 60, or over 60 minutes. So no Googling this or phone a friend on this one. But it'd be just interesting to see how much time you think that the average person inside of the UK spends on their phone per day. We're getting a lot of votes coming in now. About another 10, 20 seconds. So just those numbers again. Less than 10, 15 to 30, 30 to 45, 40 to 60, or over 60 minutes per day per adult in the UK. And the results have come in, which is very interesting. So we've got less than 1%, they're just 1%, sorry, on the less than 10 minutes. Nobody selected the 15 to 30, interestingly. We've got 14% who've selected the 45 to 60, but way out in front, we've got the 77% of you think that over 60% of, over 60 minutes is spent per day. Let's have a look at what the data actually tells us. So you can see here, in fact, yeah, everybody, or the large majority of you were actually correct. The number is actually 148 minutes per day. That's over 2.5 hours. So what does that tell us? Well, that tells us that, in fact, that device is a really good device through which to communicate and transact with your customers. The fact that that device is in somebody's hand for over 2.5 hours a day, and in fact, if you're very much like me, even if you're away from the phone, when you come back, always swipe down, check what the latest feeds are, etc. So those devices are really useful for communicating, and the apps have driven this as well. This need to be on the phone and the usage that people get out of that phone. Now, as well as the time, what we also need to look at is the demographic and the age ranges that are using these particular devices. So we've always heard that the Gen Z, they're the big users of the phones, and in fact that is true. But what about the baby boomers, the millennials? Where do they fit into this? So just another quick poll now before we carry on. So I've got a poll here, which is, which age group has seen the biggest rise in usage over the past 8 years? So between 2012 and 2020, which one of those age groups? So we've got 16 to 24, 24 to 34, 35 to 44, 45 to 54, and the over 60s. So if you can go on now and again just vote on which of those particular age groups you think has seen the biggest rise in an 8-year period. So we've got lots of votes coming in now. It's interesting to see how these are building out. Yeah, okay. So I think we're there now. Yeah. Oh no, a few more. Right, that's it. So that the results are in. So 14% of you think that 16 to 24, 2% on the 25 to 34, 5 on the 35 to 44 range, 18% of you think it's the 45 to 55s, and then 62% believe that the biggest growth area is in the 55 plus. So again, let's just have a look at what the data is telling us. So let's start with 2012. Well, you can see here in 2012 that we've got a big usage, as we would expect, in the 16 to 24s, and the 24 through to 44 age range is roughly about the same. But we can see then it rapidly tails off as we go into the 45 plus age group. What happens in 2016 is we can see now that there is now a much bigger take up in some of the older age ranges. And in fact, there, if you look at the 45 to 54-year-old, you can see, and in fact, in both the 55, 64 and 65, we're seeing a massive growth there in the take-up of smart mobiles inside of the UK. And then finally, in 2020, we can see that we get that continued growth again in those uppers. So in all age groups, we're seeing that continued growth. And as I said back to the beginning, you know, this is projected to keep growing over a period of time. But which was the group that that grew the most? It was in fact the 55 to 64-year-old range. And you can see there that increased from just 9% to in 2012 through to 87% in 2020. And part of that and the take-up of smartphones and apps was purely because of the change in those apps and how people started interacting with them. Maybe in the early days that there was a lot more social media type use, but over time, companies such as utilities companies, banks, etc., and in fact local authorities, housing associations, health, etc., realized the value of apps. And as they started to bring apps on board that were more useful to potentially an older demographic, so the uptake of those applications increased to the point where we see this now. And I'm sure as many of you do today, you know, we've all got you know, apps such as the NHS app for COVID. So a big drive in the take up of them. And if we go back to my point, you know, a couple of slides ago, the use in you know, in the home, you know, monitoring the security, heating controls, etc. Finance, you know, banking apps, and Alex and Craig will speak to that later when we talk about open banking, and then car navigation, etc. So some, you know, really good stats there in terms of the wide demographic that there is available to you if you're delivering out apps. Now, this slide here basically is a segue into the next slide that I'm going to share with you. It's important that if you're developing an app to understand which platforms you need to develop that app for. And that will be largely driven by the amount of phones that are in use. So we can split these down into 3 platforms. iOS for Apple phones, Android-based phones, and in the other category, it's going to be things like BlackBerry and Microsoft. So if we look at the split between the usage inside of the UK of the operating systems, it's very clear to see there that iOS and Android have about 50% share each inside of the market, and in fact the others make up for only 0.58% of all the phones that are out there in the UK. So if you were looking to build out an app, it's highly recommended that you build it for both iOS and Android, but you may not want to build it out for BlackBerry or the you know, Windows type platforms, purely and simply because we've only got 0.58 of those phones in circulation and use inside of the UK. So that brings me on to the types of apps that you could look and use, and maybe you are doing this today, or you're developing apps in-house, or you're looking to work with a third-party app provider to build out an app for your organization. What we've seen, and I think it's fair to say in the last 12 months, is we've been approached and asked more about app integration than ever before. And we've just been working recently with an app-based provider, and they're looking to build payments into their app. So within the app space, we have native apps, hybrid apps, and web-based apps. Now, a lot of apps will fit into one or more of these categories. And what a native app offers you is it's an app that runs specifically on the actual phone itself. So iOS or Android, you go on the App Store, Google or the Apple App Store to download that onto your device, and it's specifically created for that platform. So we build out an app for iOS, we build out an app for Android. Now, some of the benefits of the native apps is the fact that they're very fast, because the app is running fully on that actual device. We can make use of the power of that device. And as I said back at the beginning, some of these smartphones now are incredibly powerful. They're generally more efficient as well with the resources of the device. And because you create the app and the user stays within that app, the UI can be very much optimized. The company that I mentioned that we're looking to work with in order to build payments out inside of the app, they've built a fantastic user interface. What that gives them is they will get retention of the app, because when the customer comes in to use the app, because the interface is so slick, it's very frictionless and nice to use, the user is likely to come back to that app. If you build an app that's difficult to use, a lot of friction inside of it, you know what, it's actually quicker to remove an app from a device than it is to actually install it in the first place. And you might find that customers turn away. So that UI and that interaction is very important to create that retention, and then also further adoption as people start to hear about how great the app is. We then have hybrid-based apps. These are essentially web apps that are delivered but installed through an icon on the device. So it's basically, you would still go onto the App Store or Google or the Apple Store to download that onto the device, but essentially it's going away and it's getting its resources, etc., from the web. What hybrid apps can be good for is if you're just trialing, you're not sure whether you want to build out a native app in its entirety, but what you'd like to do is test the water. Hybrid apps, can be a stepping stone to that native app. Try it, see what the uptake is, etc., and then potentially build that out into a full native app. And then finally, we have web-based apps, and many organizations will use web-based apps. Essentially, these are mobile responsive web pages. They're device or OS agnostic, because essentially the customer is just going directly out onto the web to receive that content. There are some advantages to that. Development costs are down, because if you build a mobile responsive website, it doesn't matter whether I access that through my PC, through my tablet, or through my smartphone, the experience is the same, because I'm just going onto the web to receive that content. And also you can minimize the maintenance, because you just make the update on the web, and all the users instantly get access to that. I guess some of the disadvantages being on like a native app is if you potentially need to access the resources on the phone, the camera, for example. Again, the organization that we're working with to embed payments inside of their app enables you to report faults, etc. But as part of that fault reporting process, their app will actually invoke the camera on the device. So you can take a picture of the particular repair and then submit that as part of the request into the organization. So there are lots of different ways to use these apps, etc. And I guess it's down to your needs as to whether you build a native app, hybrid, or web. Now today, using our current services, we support the hybrid and the web. But great news, before the end of the year, we're going to have a SDK basically, which will enable you to build payments securely and natively inside of your own app. So If you're looking to build an app, or you're employing the services of an external development house, please speak to us, because we can enable secure payments to be embedded inside of your apps moving forward. So that brings me to the end of my session on apps. What I will do now is hand you over to Alex and Craig, and they're going to take you through some of the changes that we're seeing and additions that we're seeing inside of open banking. So I'll now hand you over to Craig and Alex. Thank you.
Thanks, Paul. Afternoon to everyone listening. So if you join me in session 1 of Pay360 Talks, you'd have perhaps heard me discuss some of the exciting innovations in open banking and how that technology can help you. And what we want to do in this section is explore that world a little more, give you some further insight into exactly what it is and how it can help you in your revenue collection, your customer engagement, and your digital strategies. So I'm delighted to be joined today by Craig Tillotson. Craig's the CEO of Ordo, an organisation focused on open banking solutions with whom Pay360 are now partnering. And what we're going to do here is we're going to have a chat. We're going to chat about open banking, hopefully give you some further insight into what it is and what it can do for your organisation. So Craig, again, thanks for joining us today. We do appreciate that. Perhaps you could start by giving us a little bit of background into yourself, maybe your background in the payment industry, and perhaps touch upon the partnership between Ordo and Capita.
Sure, Alex, thanks very much. So yes, as you said, I'm the CEO of Ordo. I'm also a co-founder, and I've been in this role for 3.5 years, since when we founded the company. Previously, I was the CEO of Faster Payments, the Faster Payments scheme, which many of you may have heard of. Just to give you a bit of a pen picture, the Faster Payments scheme in the UK was one of the world's first 24/7 real-time bank-to-bank payment services, and it's been a huge success for the UK. Last year, the system processed nearly 3 billion payments worth over £2 trillion. And even though the system is already 12 years old, it's growing at about 20% year on year, which is really quite staggering. And the other thing from a technical point of view is each of those 3 billion payments it processes, it does irrevocably in under 20 milliseconds. An amazing piece of technology. Now, while I was at Faster Payments, I worked very closely with the Open Banking Implementation Entity. And this is the standards body for open banking in the UK. And we work with them to build the open banking payments APIs so they fully use the Faster Payment service. Now, when Faster Payments merged into a new organisation, Pay.UK, about 4 years ago, I took the opportunity with a number of my executive team from Faster Payments to found a new business, Ordo. Now, we wanted to use open banking to make the capabilities of Faster Payments usable beyond its original core use case of banking initiated push payments, when you go on, log into your bank and say, send this payment. And we wanted to simplify and enhance its use for all sorts of bill payments, contact center payments, e-commerce, and even point of sale transactions. Now, we've had our platform live and operating for nearly 2 years now. We've processed millions of pounds of payments using open banking over Faster Payments. And we're really excited that very shortly the benefits of the Ordo open banking capability will also be available as part of Capita's Pay360 solution.
Thanks, Craig. Some really good background there. You've obviously got an absolute wealth of experience in UK payments, given what you've just said there. So before we perhaps delve into the specifics of open banking, can you give us some insight into how is it that the UK payment space has evolved to this point?
Well, how far do I go back? I'll go back to the decade I was born, which is the 1960s, and really up until that point, there are really only 2 ways you could pay for something, or you could provide money to a supplier, which is through good old cash and checks. Now, in the 1960s, there were 2 really big developments in the whole payments arena. The first was the introduction of the very first direct debits. Now, these direct debits were originally based upon paper and then magnetic tape instructions. And they're now doing essentially the same job they were built for them, but with bits of the internet replacing those magnetic tape files. The other big development was in cards, originally credit and charge cards, and then debit cards. And again, these started with paper vouchers flowing around the system before moving to electronic terminals and all the way through to chip and pin and contactless, but essentially based upon the same core technical and business architectures. Now, from the 1970s through to the 2000s, there was not much fundamental change in what payments did. But we get to around 2005 and a couple of big changes, both in demand and supply of payments that came about that we're still working with today. Firstly, in the demand side, we had the introduction of a completely new way of doing business through the internet, online and e-commerce, and increasing the need to take payments from customers online. And secondly, on the supply side, we had the regulatory driven development of the faster payment service. As I've said, one of the world's first scale 24/7 instant bank-to-bank payment systems. Now that brings us round to today, with the faster payment service firmly in place and demand for digital payments like e-commerce growing, but still using the only real show in town for those e-commerce payments and others, which is cards.
Great, Craig. It's a great potted history of how it is we've ended up where we are, and there's a ton of legacy in there as well, of course.
Yeah.
And it seems to me, and I have a lot of conversations in the industry, that every conversation I have these days, someone wants to talk to me about open banking. I'm sure it's even more the case with you and given your position. In your view, then, what are the factors that have basically led to having open banking on everyone's lips in the industry? Is it a technology change? Is it a regulatory one? What is it driving the conversation now?
Well, I think it's both a bit of technology and regulation. And on the technology side, frankly, what Paul showed us a few minutes ago has been a huge change with both the adoption of the internet and now mobile banking. That means that consumers and small businesses are interacting with their bank multiple times per day. And that is a fundamental enabler to doing things differently in the way you work with your bank and you do payments. And the other piece then is regulation. Now there's two sort of flavors to this. The first was the second Payment Services Directive. You may have heard of it as PSD2, which is European legislation which applied in the UK before Brexit. And also in the UK, the Competition and Markets Authority, the CMA, investigated retail banking competition a number of years ago. And they both developed the requirement for open banking.
Okay. Thank you for that. So I'm aware when we talk about open banking, the conversations I just referenced there, I have parties talking to me about the two parts of open banking in essence, account information and then payment initiation services. Could you perhaps describe to us what each of those are and how they could help us solve some challenges in the industry?
Yeah, sure. I mean, the first one and the first bit of open banking that was launched to market were, as you say, the account information services, AIS, one of the TLAs for today. And account information services means that consumers and small businesses can share their bank account information with regulated third parties. What's that useful for? It's useful for account aggregation, so I can see how much money I've got on different accounts on a single app. It can be used to support lending decisions if a business wants or a bank wants to lend money, having a full view of the transactions of a customer. It can also help significantly in account identity services when you want to know you're paying the right person to the right account. But there are also some really interesting use cases that are being developed using AIS data to help with questions of affordability and debt management and collections of payments. So that's where account information services are. Now, the other area you talked about, which is the one that is my particular favorite and interest, is payment initiation services, or PIS. Now, these have been made available more recently, and in my view, are potentially an even bigger deal. And this is the capability that's at the heart of our payment service. Now, what does payment initiation service mean? It allows FCA regulated and authorized companies like Audo to set up individual bank-to-bank payments for customers in real time with the customer selected bank, which the customer can authorize in their mobile banking app or internet banking service using something as simple as a fingerprint or even a Face ID. So those are the two pieces.
Great, thanks for that, Craig. It's simplified what can be a really complex area there. So let's get to the heart of it then, Craig. What do you think are some of the key benefits you think open banking can bring to our customers, many of whom are on this call today?
Well, I think open banking payment initiation is a tremendously powerful capability, but it is a raw capability. And we've spent the last year working with the Pay360 team at Capita to surround that capability with the things that organizations need to actually collect money. The movement of the money is only part of that process. It's what do the rest of the business processes look like?
Okay.
Perhaps I can give you an example. We can allow an organization to put a pay by bank transfer button on a web page and then allow an end user to authorize a payment from their bank account. And that's for a complete end-to-end digital journey rather than popping in and out. Now, good as this is, perhaps an even more interesting use case is in the area of staff mediated payments. So let's say your contact center needs to take payment from an end user to pay for a service, for example, and how that can work with Pay360 and Ordo. Now, once the agent knows they need to collect payment, they can initiate what we call a smart request for payment from their client. All their system needs to know is the amount due, what the payment's for, what reference the organization wants to see in its bank statement. And alongside that, all they need is an email address or a mobile number for their customer. Now, with Pay360 and Ordo, the contact center agent can securely attach documentation, for example, an invoice, or even service instructions for an end user. And that request is then sent to the end user in real time. They open the message, follow the link, and all this information is presented to them so they know what they're paying for. Then, potentially while they're even still in call with a customer, they simply select their bank from a drop-down list. And by the way, we cover 98% of consumer accounts and most SME accounts. And then Ordo immediately and automatically opens their mobile banking app for them. And then the magic of open banking payments initiation really happens. Their bank has set up the payment, including all the account details and references. All the customer has to do is to authorize the payment using their fingerprint or Face ID. Now, having done that, immediately, and this is the wonder of faster payments, the payment is made irrevocably from their bank account to the organization's account. It's as simple as that. Now, at the same time, Pay360 and Ordo tell the agent that the money has arrived and that the rest of the business process can then happen.
Yeah, brilliant. Thank you, Craig. And I think that's one of the key things. And, you know, when we're talking to many customers on this call, it's about, yes, the digital self-service journey, but what about the customer engagement journey? This is something we've been talking about throughout today. And obviously, this is something we're working closely on. How can we improve that? How can we keep customer and contact center operative, if you like, on the call, continue that engagement, simplify that process, remove all that friction? So really looking forward to be able to bring this solution to our customers. Let's have a look forward, if we may. And when you look into your crystal ball, Craig, what do you perceive in terms of adoption of open banking in the UK? What you're foreseeing in that arena?
Well, I think I'm not completely relying on my crystal ball anymore. Maybe 18 months ago I was, but I think while we're still at the foot of the adoption curve, because the capability's only been around for around 18 months, I can hear the engine starting to accelerate. Now, we have a number of clients and partners already adopting with powerful use cases that are really starting to gain traction. But there's some really good examples in the property and rental sector where early adoption of open banking is happening. And more generally across the industry, we've seen very significant uptake from HMRC. They are leading the way with open banking for payments, for tax payments. And that looks to be already only 6 months into operation to be a tremendous success.
Yeah, absolutely. Yeah, very good use case there. And if we continue the theme of looking forward, where do you think open banking's headed in terms of new innovations?
Well, it's in some respects, it feels like a strange question to ask because we're right in the middle of innovation at the moment. But actually, 2022 looks to be like another really exciting year. Now, the big news is that the CMA, the Competition and Market Authority, who mandated the 6 biggest banks to start delivering open banking, have asked them to provide not only the single payment capability we've been talking about just now, but a recurring payment capability. And it's called, it's a bit of a mouthful, it's called Variable Recurring Payments, or VRP. That's another acronym for you. And I think you'll be hearing more of that in the months ahead. And what is it? Well, it's going to be launched by the main banks in January 22, and it will allow authorized companies like Ordo to make our current services work not just for a single payment authorization, but off the back of a single authorization from a consumer, approve a whole series of future payments. Now, with this, we'll be introducing an open banking powered real-time debit service that can act as an alternative to direct debit. simplifying the whole service, especially the numerous unhappy paths you get with direct debit, for example, when a customer cancels their mandate, but also delivering control to payers and real-time payment to the billing organisation. And I think it's not just direct debit that will get an overhaul. The VRP capability will allow us to introduce a whole series of repeat payment capabilities, both in the e-commerce world, where you could have the equivalent of sort of an Amazon one-click, and in the point of sale world, where you've got clients going into regular situations, maybe on rapid transit or in a coffee shop, where they just want to do a regular purchase and just scan their phone once and do it. That's all going to be enabled through open banking, and therefore directly from bank to bank, rather than cards using VRP. Now, I think open banking is already absolutely transforming payments, and VRP, which is the big excitement for next year, will take us even further.
Fantastic, Craig, and thank you for your answer. In session 1, we were asked some direct questions about direct debit and where the future may lay. So anyone on that call, hopefully it's giving you a bit more information as well. So thank you again. I think it's super exciting in terms of where we are now, and even more so when we look ahead and what open banking can offer in future. Thank you for your insight and for your expertise. If you can hang around for us, we're going to do a Q&A in a minute. But before we do that, I just want to give you my summary, if I may, in terms of open banking. Thanks, Paul, for bringing up the slide for me. I think it's fair to say, to kind of follow what Craig was saying there, open banking as a payment method is increasing in terms of profile in the UK. I don't know to what extent you guys have used it. I've used it recently, paying online, made a charitable donation recently, and actually my bank is now encouraging me to pay my credit card off that way, and it's really easy. The open banking online payment journey is just that. It's super convenient for the customer. As Craig said, open banking transactions, they're push payments. It's the opposite of cards. So there's no account information is shared with the merchant at any juncture. And that provides assurance for those sending and those receiving monies. The consumer basically authorizes the payment directly in their normal banking interface. So if we assume that's a smartphone, it's as simple as touching your finger or your thumbprint against your phone screen. Super convenient, super easy. Again, we touched upon it in the conversation there with Craig. Open banking payments can help with customer engagement. So they can be collected in the contact center or back office by sending a digital payment request to a customer. And then opening that link will allow the customer to make a payment immediately, then again via their mobile banking app or online banking. No card details shared, no PCI DSS compliance. It's integrated fully into your line of business systems. And again, you can remain in conversation with your customers, whether you're on an inbound or an outbound call. We talked about account information services there, and actually there's a real enriched data you can get out of there to help you meet certain challenges. One of those being using that data intelligently by putting a software layer over the top to drive what payments are affordable and sustainable to help your customers in the areas of debt recovery, debt management. And it also provides a technology to help you with payments out to your customers, not just a means to transfer monies rapidly between bank accounts, but also to validate the payee in seconds prior to any money transfer. So again, we're really excited by the possibilities of open banking, and we're seeking to bring these solutions to our customers at earliest opportunity because we genuinely believe they can help in some of the core challenges faced today: digital adoption, revenue collection, and customer engagement. I'm personally delighted, as we all are in Pay360, to be working with Audo. Again, say thank you to Craig for joining us today. And with that being said, I think we're now going to step on to answer any questions that may have arisen. So Wayne, I think you are moderating for us. Are there any questions for Craig, myself, or Paul?
I am, yes. So there's a few that have come in. First question, I think I know the answer to this one, but I'll let the experts answer. So with reference to open banking, is this just for UK bank accounts or foreign too? And this is specific to Pay360 clients that process payments in an education university environment.
Okay. Well, Craig, if you want to touch upon where we are, perhaps in terms of UK adoption, and then how you foresee it coming into Europe particularly, because obviously some countries are ahead of the curve and some are a little behind. Please talk freely about where you perceive the market to be.
Yeah, so I think I referenced it earlier in terms of the regulation and PSD2. So the open banking model and things that are very similar to it are rolling out across the whole of the Eurozone, the EU and the UK. The UK, I think, is a little bit advanced. We're probably 12 to 18 months ahead of the game in terms of most European countries, partly because the CMA took this approach and said, let's start deploying it now. So I think you're going to see, so we have got full coverage of the UK now in terms of our open banking capability. Our platform will be rolling out in 22 to a number of European countries. The countries that come in first, well, the first thing is once we deploy once, effectively we're deployed everywhere in Europe because the single currency and single platform. In terms of making the service fully available, some markets are more advanced than others, and that's a product of the size of the market, how they bank today, and also how well the PSD2 integration has gone into banks in those countries. So, for example, Germany's pretty advanced. So I think you will see this rolling out certainly across the continent of Europe in the next few years. But also, I think it will go more broadly than that. Australia has a sort of parallel capability which is being rolled out now, and the US, North America, Canada, particularly, and then the USA, they will be following quite quickly, and it'll look something like open banking or PSD2. So I think it's going to be a global phenomenon.
Thank you, Craig. Next question that's come in on the question console. This one's probably aimed at Alex, possibly Paul. Can you elaborate a little more on payouts, especially for large scale payments to diverse customer groups?
I can try for sure. I think what we're looking at, and there's a similar question in session 1 actually with regards to payouts. So there's a number of different use cases for payouts. Has the end person got a bank account would be a good start point. Now, if they have, and 98% of folk in the UK have, then open banking can provide the means of checking whether the person you're paying is the person who owns that bank account. It's something called confirmation of payee, and it's a really simple invention, if you like, but something that can really simplify process, strip out some operational inefficiency, remove cost, and then transferring that money. There's lots of things you can do in terms of funding that, if you like. So there's fintechs, there's banking as a service, as the likes of Pay360 can sit in the middle to facilitate the exchange and the funding of a pot which can move between entities. So fundamentally, I would say open banking is a fantastic solution for moving money quickly because it's sat on top of faster payments, so money can exchange between accounts quickly, and you can do that validation of who you're paying, and then you get the trackability, you get the auditability. You've got all that great data you can leverage as well. So I hope that answers the question. We perceive open banking to be the way forward in terms of supporting our customers in their payout requirements.
Understood. No, I think that's a good answer. And looking forward, facilitating payments inbound and outbound using the same rails. So this is more a question. I mean, it's high on everybody's agenda with regards the increase in crime and fraud, and we have a question specific where customers have been advised, where they weigh up how they tell their customers not to click on links in emails and texts and to go directly to a website to pay with solutions like this. So what would the advice be? Telling people to click links, specifically mediated?
So I think if I jump in there to start with, and Craig, I'd welcome your comments if I may. So I think the thing to say here is unexpected links are very different to I'm on the phone with someone and I'm going to tell you you're going to receive an email or an SMS and it's going to be labeled in this way. It's going to have, actually, as Craig mentioned, it could well have something that identifies you uniquely, i.e. it's an invoice, it's a bill, it's a reminder, it's a request. It uniquely identifies the conversation you've just had or what it is you're paying for. And I think that's the assurance you would need in order to make the payment, as opposed to something that comes out of the blue saying, please give me £50 and you don't know who it's going to. So I think that's one reassurance. Craig, I don't know if there's anything you want to add, because obviously this is the very nature of smart requests.
Yeah, I think the points you make are incredibly useful, and I think it's the expecting arrival. So if you're in a collections process in a call center, you're actually talking to the customer and saying, right, I'm now going to send you a link by text or by email. Please follow that. The other thing is, and this will grow over time, the user experience. For example, when you receive a smart request, you click on that. You don't enter any data at all, so it's not like a sort of phishing where please put your account details in. All you're doing is your mobile app will spring to life. That's only possible through the open banking protocols, and then all you do is you authorize that payment directly with your bank, so you're not sharing your credentials with anybody else apart from the bank. So I think people will very rapidly get used to this process and understand what comes with it. But I think the fundamental thing is, this needs to be an expected transaction. Either it's been a message you're expecting to receive, it's got information that you recognize. And so, for example, one of the things we do is when we make the auto service available for self-service for small businesses, when we describe who you're paying, we only ever use the account title of the bank account you're paying into. So you can't join us and pretend to be HMRC or whatever and then send a request from HMRC. It will come from whatever your account title is with your bank, where that's been KYC'd from your bank. So I think those sorts of being aware of it, having the right information on there, having the right invoice, etc., and being in the context of a conversation with the customer that you either having in real time or you've had previously.
Understood. So mediated assurance basically during the process. Understood. Okay, this one definitely complex for me, so I'm probably going to throw this directly at Craig. Hopefully you can understand the question. Okay, one of the most problematic areas currently is collecting income from large organizations rather than SMEs or consumers, as we're still dependent on remittances. Are there any plans to tackle this area with open banking?
So I think the short answer is probably no. And the reason for that is that open banking has been constructed both in the UK and in the European Union to provide mechanisms for consumers and small businesses to pay. As soon as you move up into the corporate end, you're not covered by the legislation of open banking. You also have a huge diversity of payment mechanisms with banks. The way a large organization authorizes payments with their bank, everyone can be slightly different. So I'm afraid there are a huge number of things that open banking is solving and is going to solve for. That one is not one at the moment. Sorry.
Not a problem. This one, probably Alex or Paul. Paul, this may sit in your bag. Payments in, so from open banking as a channel. Could you expand on how you see those payments validating and landing in AIM, for example?
Yeah, so essentially they will operate like any other transaction, Wayne. So regardless of the channel coming into AIM, we will just identify that and then basically present that data as we would if it come in through the internet as a mediated transaction, touch tone, etc. So the structure and the format of that data will look exactly the same as all your other transactions.
So I'll just add something simple there, Wayne. As per all transactions we're capturing here, we're capturing who it is that's paying for what, and we have the validation, the balance, the fund code, for example, and none of that changes because it's an open banking payment. In the contact center, the links to pay.net. In the internet world, the links onto internet payments or SCP, but we're always capturing who it is that's paying for what. So nothing changes. This becomes a simple means of moving the money, and it's still integrated into those core functions in the back office.
That's great. I mean, I think that answers the question perfectly. I don't know whether to expand on this one because I'll read it out anyway. We have always used Pay360 for incoming payments, potential interest in outgoing, certainly outgoing for bank-to-bank payments, and it's just asking, are Capita getting involved in that area as well? I think from the session, we can assume yes.
So we are, and we would like to speak to customers more about the use cases you guys have and how we can help resolve those challenges. So we know there's technologies out there which can be costly, can be inefficient, depending on how you're seeking to engage. When you're making a bank-to-bank payment, There is nothing better than faster payments and open banking security there. And I think it's a case of protecting the organisation in making the payment. So am I making the payment to the right person? Can I do that quickly to get them the funds they need quickly? And can I be assured I've got an audit trail and I've made the payment? So open banking can resolve all of that. And there's a reflection from us that there's other solutions out there for, I'm going to use the word edge cases, and it's perhaps not fair, but in a small majority of cases you might need a prepaid solution as an example. But for the vast majority of the cases, open banking can certainly meet them. And we are definitely seeking to bring those solutions to our customers.
Superb, thanks, Alex. There is a question here asking whether we are able to do a demo of open banking today. I know we're not set up to do that, so I will arrange that for that particular customer. Thank you very much for the question. This is one question that's, I know it's not one we would normally deal with here, so but for full transparency, we'll ask it anyway. What costs are involved by the different parties and by way of comparison to card payments?
Okay, so we won't discuss specifics around costs. What we will say is that from a model point of view, then the model predominantly is transactional in terms of it's a per click fee as opposed to a percentage fee. So in card world, we'll take a percentage of that transaction, which can be quite costly when you've got a high average transaction value, as you will do when you're collecting rent and council tax. So there are opportunities to drive efficiencies in terms of speed of cash flow and also in terms of cost. And I think that's probably the extent we could go into today, because obviously we'd need conversations with customers around that. But that's broadly the model, and that's the opportunity that exists with open banking. It can be cost effective.
No, understood, and certainly clearer and simpler than what can be very, very complex credit and debit card interchange fees, interchange plus, or whatever they all are. It allows you to obviously fully budget for the costs of transactional revenue based on the numbers that, if you make this a success, which we'll hope, is going to happen in the future, this is the way forward. It's going to be very simple to calculate what this type of a solution is going to cost moving forward. So there are a few more questions. Unfortunately, time is against us, so we'll have to sort of look to wrap now the Q&A session. But what I'll do is make sure that any further questions are addressed offline. We will get back to you, and I'll close now and pass back to Alex and Paul and Craig to close. Thanks.
Thanks, Wayne. Thanks for chairing that. And I think obviously we've run over slightly over, so thank you for your patience, everyone, and hanging around for us. Just to reiterate what Wayne said there, if you've got any further questions, comments, or indeed feedback, please just reach out to us and we'll be glad to discuss further. We'll let you get back to your day. Thank you very much for listening, and bye for now.